All right. Hey, what's going on? Jamie Saettele here with the midweek strategy webinar. Apologies for the technical issues. For someone that's relatively young, uh, technology and I just don't get along all that well. But I'm gonna get started. So hopefully you guys, well, yeah, if everyone's filing into the room now, it looks like with the new link. So um, looks like we're good to go. Obviously, this is being recorded too, so we'll be up later. But let's get started. First things first, yen. Obviously, these are the short-term timing charts that I'm looking at here. Um, the dollar yen touched on this yesterday in the swing update, but notice how this is the chart that was shown. I don't have the moving averages on here, but the blue bars, okay, it's RSI above 70. Okay, this is a daily chart. Remember I had said that in the swing update, we haven't seen the RSI below 30 um, in something like over 3 years, right? So it's actually back here in June. It was only for one day. But generally speaking, June of 2012, generally speaking, when you have, RSI printing below 30, it indicates kind of a behavior change. Okay, we talk about behavior changes a lot, obviously, in slope analysis, right? Behavior change when you break support or resistance, or you start establishing support or start establishing resistance, right? All those are behavior changes. Well, you can say the same thing with RSI momentum, and we do that quite often. So this is going back to really the last bear market in dollar yen, or the last bull market in yen, if you want to look at it that way. And, if we are able to print below 30, that would indicate that something, maybe potentially material is really taking shape, because that would be, something that we haven't seen in 3 years. And, a print below 30 would basically do some big damage potentially to the bull market that's been going on for years. It would tell you that you've got what could be a sideways, if not even a down market on the daily chart. So that's obviously huge. Okay, and we are getting into, as mentioned, we are getting into big support here, or what I think could very well be big support from 119.90. All right, 119.90. You've got this median line there. We don't know if this has any validity to it at all yet, as far as the support is concerned, or as far as the slope is concerned. We just don't know yet if it has any validity. If we come down here and we tag this level and we bounce off of it, then yeah, we'll start to look at this as maybe something that's significant and something we should watch out for. As it is now, it's kind of speculation, right? We did have some very nice touches on this line before we even could draw it, but the plane of it, the slope of it does indicate potential for something to happen at this line. So we'll see. But 1990, obviously big. The year open price, of course, right? And even more important, here's the weekly. Okay, it's your first huge test within this uptrend. We've already slipped below intra-week here, the support line that held back earlier this year on the way up. And of course, it was also went through the gap here, okay, back in October, Halloween 2014. So huge level here. This is also obviously 1990 area, 1950 this week, 1980 or so next week, but you get it, 1990, you get the idea. Near term, of course, we've got we do see dollar yen reacting kind of where it should, right? This is the 4-hour chart talked about last night, 121.50 to 121.60, really is the area to start looking on the short side again, as far as initiating shorts if you're not already short, or adding to them. I put an order at 121.60 in the swing update. It was just missed by about 3 pips or so this morning. But we're in the right area as far as resistance is concerned, bigger picture. If you really don't want to see us back above here, because this is the median line from the structure that we've been working with on the downside, right? 4-hour chart. There is, of course, a shorter term, steeper or bearish structure, if you will, which is slightly higher, and would come in. Maybe we fool around here for a little bit and maybe we trade into it or something like over here next week. It could be resistance again. That's when you could really maybe lay it on there, even with a large position with a tight stop. But always want to be on the lookout for those kinds of opportunities, of course. But as it is now, still looking towards 119.90. This was a really good response that we've gotten here today as far as resistance is concerned. Obviously, not really too fond of shorting back above here. Like if you get back to 122, that could be resistance as well, because you have the underside of this former support line could be resistance. But it would have, kind of would break the sharp, steep, more bearish scenario that we're working with right now. So you don't want to tighten stop too much because we're playing for a much bigger move here. But and we are responding to where we should as far as resistance is concerned. But 122 would kind of be the last level. I've obviously got the stop up here, 122.60 now, mainly because there's no sense in tightening too much, especially in these market conditions. You get spikes, you get taken out of good positions before they turn in your favor, etc. So you don't want to do that. Real quick, as I speak here, watch Euro. We're getting down into 109.90. That is an area that could definitely, provide some support if we are trying to bottom, and if this broader triangle thing is the right idea. Let's see here. What's this? You're not in this trade. What's this say? In this trade from last night's swing trade. What's this? Jamie, you're not in this trade from last night's swing trade because I got hit on FXCM. I'm not sure what you mean. As far as the 120, are you talking about dollar yen? Dale? Yeah, dollar yen. Yeah, I did not get 121.60. My high is 121.58. We could be trading on different, there's different FXCM entities, right? There's in the US, it's different market than, if you're overseas or something, you have different spreads or something. But personally, 121.60 did not print on my platform. We'll get to euro dollar in a second here, but just wanted to highlight. The entry was posted as 121.50, not 121.60. Oh, well, did I post it as 121.50 instead of 60? I guess if I did, then that would be, then I guess it would have gotten hit. Let's see here. Let's see. I had my, oh, the entry was 21.50. What do you know? So I guess according to the swing update, it is in. My entry on my own platform was 121.60, but so that was not hit. But hey, whatever, works. It's right. It's the same. It's the right idea. You get what I'm saying? 21.50.60. So, okay. So yeah, if your entry was at 21.50, then you're in. Okay, with another dollar yen short position. If it was, if you left it somewhere else, then it's not in, but you get the point. All right. So the active, if we see what's 120 and 50 and 23.95. Yeah, Jay-Z says I actually put a 2162 on my platform and didn't get hit. Yeah, so I'm not sure why. I guess I must have been tired. I don't know why I put 2150 and then it was, and then I put 2160 on my own trading account, but 2150 is what I wrote, so that's what's there. Anyway, all right. So let's continue here with the yen crosses. So when we look at the dollar yen in particular, this is the classic, right? This is the zoom and retest trade. Actually, this is you look at on the daily chart. Daily and weekly charts are just so much better, I think, than intraday charts. You just, if I could only look at, if I was not allowed to look at daily or intraday charts, I'd just be so much happier. It just cuts through all the crap, right? You start to question yourself and you start seeing stuff on intraday charts. But this, you look at this daily chart and it doesn't mean that it's going to play out. It's good. It's just a trade. It's just a setup. And if it plays out, you're going to make a decent amount. If it doesn't, then the way we've played this is we'll be out pretty close to break even, slightly better than break even, I guess. But 23.95, obviously one entry, and then this entry here at 21.50, not 60, but 21.50. So we're looking towards here, right? 119.90 on the first piece. Okay, this is, again, what's known as the zoom and retest trade, the median line. This is the structure that we've been working with, and it does seem to have validity. Obviously, the solid resistance lines, and this is actually the same slope. If you just take the trend line, you hit it right here. Okay, and then today you get the huge, so-called crash through the median line, largest dollar yen decline in something like, I don't know, 2 or 3 years. And we've come back now and retested the old median line. Okay, so we should be headed lower if, this interpretation, if you will, is correct. Okay, that's all that the slope analysis will do. It tries to provide you with definable entries and exits and so on. So we'll continue to track the slope as we move forward, but tomorrow being Friday, we've been waiting for this 119.90 all week, I guess, if you will, and even since last week, thinking that could be a big area, and we do intersect this lower parallel tomorrow right at 119.90. Again, 119.88 is the year open price. Pay attention to it. Last year, of course, what happened down there? Huge. Okay, last year we had having some serious issues here with this. Last year in October, market came down and hit the year open price in October to the pip. Okay, so I'm not saying the same thing is going to happen, that we're going to come down here and then rocket off of it. It's possible. I don't think it's going to happen, but you don't want to, end up losing all your gains because you came into a big level that you thought was support and you didn't take anything off. So let's stick to the plan and look for that 119.90. Okay. Couple other yen pairs that I obviously want to look at. Euro dollar sitting right at this level right now. If I wasn't doing the webinar, I'd probably look to buy this right now. Really short term with this would be not a swing trade. This is super short term. Like I'd be trading this for maybe, 15 pip stop or something right here and just look to take it higher, see what happens. But bottom line, you're coming into support. This is also the weekly open price, right? 109.87. So got a couple things there. Let's look at pound yen. Obviously a huge mover. Percent wise is a big mover, but pips wise it's just massive because you get it takes a lot of pips to move percentage in pound yen, right? So we'll take a look there at pound yen. Let's see here. So pound yen has come into, we look at the weekly chart. Last night showed this chart. Came into 185 area, right? May high. It's provided a little bit of support. Okay, you did get a bounce off that level. The much bigger support region is down here, as mentioned in the note last night, down towards these parallels, which really isn't until 180-ish over the next couple of days. In the near term, how to get in on this trade, right? Here's what you want to watch for. Here's the pound yen chart I was looking at. So there's two slopes here. This was the one that I'm gonna make in bold, or black bold. This was the one that we were following before. Okay, and you had right before the weekend, a couple Fridays ago, we had tracking for resistance up at that week open price, which was 95.16 in the upper parallel. I did not enter into that trade then. It was going right into the weekend. It just whatever seemed odd. We did go. We were short dollar again heading into the weekend though, so that was nice. But that would have been even better. So we still have this to think of, because you've got this sliding parallel here too, which is something that you want to make note of on your charts. Okay. But we also now have an even steeper slope, and this is going to seem very strange and odd, but if you draw from here down to here, okay, and over to here, it's not always the major pivots, the high and lows, okay? Hold on. Okay. Okay, yeah, Leon, I apologize for that. I sent out some tweets, but yeah, you're right. We'll look to send out an email if we need to. I think the bottom line is need to upgrade the hardware over here. In any case, this is another slope to pay attention to, okay? Median line describes price extremely well, cutting through a lot of levels here. This also caught yesterday's low on the lower parallel. So what I make note of here, which is really interesting, is that you've got a confluence of this sliding parallel, old support, and this upper parallel here, which could be new resistance. And it's pretty close to former congestion, okay, down here. So these were lows, 188.20s. These were lows before the big breakdown. And then this level here that you see here is 188.50. That's the June low. Okay, so the June low, 188.50 to 188.20, which is just some minor lows that we had earlier in the week. That area intersects, looks to be, well, tomorrow morning from Europe into the U.S. So if we can get up into that level, that would provide you with, the ideal short position, or, way to get in this trade. Now, I don't know if we're going to get up there. Okay, so I'm not saying that, the market's heading higher. We want to be selling rallies, and the whole idea here is to identify levels that if we hit it are ideal levels to get in to this trade. So you've got a pretty solid move off the low right here. This could be something like wave A. This could be something like wave B. And if we do get a C wave rally up into this area, then that's something to watch out for as far as, taking a short position to 188.20.50. Again, those are minor lows earlier in the week, as well as the June low of 188.52.53. Okay. So pound yen, super interesting idea there. Again, the next big support probably not until near 180. So, just absolutely massive as far as the reward potential is concerned. Risk-wise, you got it. This is a volatile market, you got to keep a wide stop here. So I'd put it at 189, 85 or so. Let's see. Euro dollar, and it's just still sitting there, not really doing a whole lot, but this is a level that you want to see hold if we are working on a bottom. Another yen cross. It's super interesting right now, obviously. Raj saying if we don't get up there, we don't get in. Yeah, I mean, I'm not going to go chasing or trade just because you want to, you're desperate to be in this trade. I mean, Raj, there's going to be other opportunities and, that come along, and they come along all the time. Let me show you something here, Raj. It's not like pound yen is going to fall off the face of the earth. It's going to go down every day forever. Okay. There's going to be plenty of opportunities. Let's see. Go to this weekly chart. Okay. Look at where we're coming from. Okay. Up here. There's massive support that's a lot lower. There's very well-defined resistance that I just talked about, 88.50. That's what you wanted. That's what you do when you trade to make money. Okay, you don't panic and enter in at the worst possible time because you see a huge move coming. And where's your risk at that point? I mean, if you went short now, what do you put in, like a 400, 500 pip stop? So just be patient. We have some nice dollar yen position right now. Dollar MEX started to work earlier. It's kind of not really doing a whole lot right now. Not really sure where it is. Let's see, dollar MEX, yeah, 79.80. Euro dollar, whatever. I mean, the setup's the setup, okay? And if pound yen trades up into where we got here, the levels I was just talking about, pound yen trades up into that 188.50 area. Here it is. That is just ideal, okay? And again, it fits from a number of different standpoints, A, B, C. Let's look at the momentum on pound yen. Let's look at see what the momentum profile looks like. Okay, we've come into this is support that you find on your trend table, okay? So we've come into support. Pound yen actually just dipped below 30 on RSI. That's a pretty rare thing, okay? So let's see what that looks like when we look at it from that standpoint. Okay, here you go. So pound yen just dipped below 30. You see the red bar right there? Red bar right here, red bar right here. So going short now could be the worst possible timing, okay? Because even back here, when we came off the 2007 high, you had one print below 30 in RSI coming off a major top, as we are doing now. That's really the only time to compare these things, is when you're coming off a huge top, similar circumstance, okay? And then we had several weeks of very volatile consolidation before the thing fell apart. What if that happens again? Okay, all you can do is control, where you enter and where you put your stop, all right? So, making the case here that the June low at 188.50, if we get up there by tomorrow, might be the best spot to do this. And even if you're not going to fall off the face of the earth, you at least have, the possibility of playing in a range, that could be a range that spans, 185 to 189 or something over the next week or two, okay? So, downtrend, identify resistance, sell into it. Uptrend, identify support, buy into it. Don't panic. Trade at the levels that are marked on your chart. And here you see euro dollar getting a little bounce. What are we trading? 90, 8 pips. Not bad for a lunchtime trade. Okay. All right. Pound yen. So let's look at Aussie yen. There's another yen cross I wanted to look at. Okay. Aussie yen. We've broken trend line back to 2009. Okay. Also, this is channel resistance, so it's it's a good slope. Targeting for this, you've also got this is the pitchfork. You've never touched this median line, but this is a good fork. Look at high back here, 2013, low in 2013, high in 2014, in November of 2014. And since then, you can see the the upper parallel called the resistance back here in very early June. And since then, obviously, Aussie yen's come off significantly. So the target for this, 2 legs down, would be your first big support, and that is near 83.80. Okay. So again, that's the weekly chart. Let's look at the other time frames and see what we can track out for resistance. All right, well, there is the possibility of a ZRT trade. Again, that's zoom and retest. We are looking here at the September 2014 high, the October 2014 low, and then, of course, the high from November of 2014. That median line, right, just broken. If we come back in the next day or so and test it, that would give you the opportunity to put in a short at that median line. Okay, so tomorrow it's at 91.50 or so. Okay. Looking at the short term, a short term fork that might be of interest. We said 91.50 on that daily chart. There's a little high at 91.60. This is 4-hour chart, so this would be like tomorrow afternoon at this median line. So this is even shorter term one. So that looks like a decent spot too. See how the market crashed below this lower parallel, tells you that you're going to find decent resistance at this slope. Okay, because you have a lower floor, look for a lower ceiling, etc. So that's what I'd be looking for, is 91.50-60 as far as Aussie yen's concerned. So you can see we've got some pretty well defined levels for these yen crosses, Aussie yen, pound yen, etc. Let's look at while we're on this subject of yen crosses, why don't we look at the S&P. So it's really kind of a mess, an algo mess, if you will, headline-wise, right? So we've tried with desperation to break this long-standing median line here that those of you over here at SB Trade Desk have been looking at for many months. And you can see how important this level is. Obviously, the market doesn't, someone's trying to hold this thing up, obviously. I'm sure a great number of people are, but if this goes, I mean, like I wrote this yesterday in a tweet, there is nothing until like the 1950s as far as support's concerned. Okay. Confluence down here at the very end of July. I might want to buy puts that expire or something like that in mid-August. It might be a way to play it. Resistance-wise, I mean, we came back and traded a few ticks from, what was it, the morning high, 2068. 2068.75 is where we opened the week. So you can see how this might be the slope to watch here, the near term. Just simple high, low, high. Raj saying it has broken the median line yesterday. I don't think so. Oh yeah, if right here, sure. But you want to see it's these spikes down here. Want to see it break the lows. Okay. Yeah, if we're going on closing basis here, yes, we have. You can see here closing basis. Okay, good thing we have found resistance this morning, just shy again of the week open, and this sliding parallel up here. I still like it lower. I mean, I heard some arguments, people saying, well, the whole Greece thing and the whole China stock market crash can't send the S&P lower, therefore it's not going lower. I don't know if that's true. I mean, I think the technical action, um, you know, aside from that, is pretty telling. All the stuff we've written over the last few weeks and months about the momentum. Look at the swing page. The momentum just being terrible reminds me again of how the euro traded before it crashed last year. Um, just near-term slope and all that stuff here. You could look. I'm not saying you can't stay held up for a little bit and maybe test this level, okay, or even the upper parallel, okay. Like I said yesterday, 2090 is not out of the question. But the risk to me is on the downside. Yeah, fine. 40 pips of 40 points of upside risk, and 100 downside. Okay, minimum. That's what I'd say. That's how I'm looking at this. Looking at the S&P. Nikkei. This was the slope that we were pointing out in the swing update not long ago. Back here, a couple weeks ago, it ended up doing a pretty good job, I'd say, as the Nikkei fell on the order of 5 or 6% yesterday or something like that. Today we were up almost 3 or 4%, and currently we're up 2% as we have turned down from this level. Former support, okay, seemingly acting as resistance. You know what happens in a downtrend, which this appears to be one at this point? When former support becomes resistance, the market goes really hard down. So that's what I'm looking for here with the Nikkei. If we look at a 15-minute chart, look at the structure. A, B, C. It's a violent rally, but it's in 3 waves. Okay, A, B, C. So, keeping in line, I think, with looking lower in the Nikkei and the yen, looking higher in the yen at the same time, which means lower in dollar yen crosses. Okay. Euro dollar. I mean, I don't have a whole lot to go over here at this point. I mean, we still are, we're following this triangle idea. I don't know if it's the right one or not. Euro dollar is awfully weak today. Big nasty outside day. We had pointed out pretty solid resistance last night at 111.20. We're now coming into support from the week open in this lower parallel as I speak, right at it. So hopefully by today we have a pretty good idea whether or not this thing has any chance of turning up. If it 111.20 obviously was ideal as far as resistance is concerned, but we're still trading on this lower parallel. Okay, so stuck between a rock and a hard place as far as euro dollar is concerned. The way I'm looking at it right here. Okay. So Raj, I hope that you should. I know that you're really wanting to trade this S&P. Check out. You might, my chart might look a little different than yours because I'm not sure if you're trading futures or if you're trading the CFD. But look at this. This is a 4-hour chart. So pull up these levels. Okay, this is the May high here, the June low here, and this is the June high up here. Okay, so sorry, not the June low, but the June was that 8th low or something, and this is the June 22nd high. So yeah, use those for your fork, okay? And a couple sliding parallels up here, which was support here through the gap, resistance here yesterday, okay? Down here, you had downtrend support. So follow this as far as your trading is concerned. You want to sell into resistance, okay? If you start to break down through support down here, this line right here might become resistance if you start to break down below here. So this is what I would do, Raj, if you're trading the S&P. Follow this chart, okay? Yeah, so this should help you out, all right? I think Should help you out. All right, Kiwi. I want to look at some Kiwi crosses. We've had some interesting technical, kind of some reversals here the last few days. Oh, Kelly, take care. Absolutely. Thank you very much. You have a good one, Kelly. Absolutely. Pound yen been absolutely stocking that for sure. It's some good looking chart. Let's take a look at the Kiwi. So Kiwi dollar. Sandeep's got a good question that I'm gonna answer here in just a second. But Kiwi dollar, we were looking at support and resistance, potentially a little higher and lower. It's been a really tight range today, where we were looking at support and resistance, maybe in the 67.80, 68.10 area for resistance. It could still happen, and then potential support down here near 66.50, 60. Haven't really done a whole lot with Kiwi today. We do have an interesting rally off the lows here, though. Okay, this is the most impulsive, I think, thing we've probably seen in a while for Kiwi, and it's interesting because, again, we're so close to that 6607 wedge target, long-term wedge target, right? Just a few pips above it. So, that's what we're looking at there. With Kiwi, but I would just follow the slope. Again, I still think you'd have a good, even if the trend has turned for a little bit, I still think you have a good opportunity to sell Kiwi into 67.80, 68.14. You just got former lows there, former congestion area, and it does intersect with slope over the next couple of days. Okay, so I would pay attention to Kiwi as far as that's concerned. Pound Kiwi is one we want to take a quick look at. Okay, so here's Pound Kiwi. This obviously goes back to April. You can see the well-defined channel on the way up. Okay, we're getting close to channel support, so I would watch for support between, probably about 226.70 or so. It's the low down here on June 25th. And what's this? Tomorrow morning, you get to that area. And if you look at it from an Elliott standpoint, you can see that 1, 2, 3, this could be sideways 4, little triangle 5, or triangle wave 4, little decline here in wave 5 to get us, set us up for a bounce. Okay, so if you're trading Pound Kiwi, would watch for support down here. Okay. Could get a bounce. The ensuing bounce would be, we don't have a clean down slope to work with here. I have something drawn. It's not really something that I'd pay attention to at this point, but I have it drawn because if the market bounces from there, I'll be watching to see if we respond near the median line. But yeah, if we get a bounce, I'll be watching for resistance down here. Former support, specifically 231.70. Okay, so that could be interesting. You could set up for a little topping pattern, but let's see how the market trades around this area. 226.70 for Pound Kiwi. But the 5-wave decline into that would be the best indication yet that we are indeed trying to put in some sort of a turn, okay, as far as Pound Kiwi is concerned. And even a minor turn within this uptrend could send you pretty far down, as far as a so-called correction is concerned, right? But do watch for support here, okay? You could get a nice pop off this. Pound Kiwi, we just went through that one. Dollar CAD is another interesting one. Do have CAD jobs tomorrow. They did not release theirs early, of course. Dollar CAD is coming into the highs from earlier in the year. 127.80 daily high over here. We almost took that out the other day. And then the high is 128.34. Okay, so you can see that dollar CAD, tomorrow's jobs would put us above the median line here, would put us above the 28.34, just above it. If dollar CAD is getting ready for a bigger move higher. I still think we, have a good chance to pull back from up here, false break, if you will. Uh, Not calling a false break, but I'm just saying beware of one because you do have the median line here. Okay, and that could act as uptrend resistance. And then the most logical place for pullback to find support would be the former high up here at 2560. That area is a very interesting confluence with slope going back, way back. Okay, this goes back, 10, 11 months. This black median line does. But then, of course, you've got the shorter term stuff there too, which is, ideal. So would watch for that dollar CAD. I had a question here, a few questions. Aussie yen from Mark. Yeah, Mark saying, so this was the chart we looked at earlier. You've got two equal legs down from the high in 2013 at 83.81. Okay. You've also got, some confluence of slope could be a little lower over the next couple of weeks, but you see what I'm saying. 86.50 would be down here, targeting the lows, I guess, from 2013. I think if you get below there, you can probably try to squeeze it out for the 84 area, 83.80. Again, two equal legs down from the high in 2013. Okay. So I would check that out. Sandeep, how's the fork more useful compared to simple support resistance? Right, so I'll talk about a lot in the posts. I talk about so-called horizontal support resistance, right? As well as, slope support resistance, okay? And horizontal support resistance is just what you're thinking about, which is, or what you're mentioning, just simple support resistance, right? There's a lot of ways to get support and resistance. That's I like to call it horizontal, like just highs and lows and whatnot, former congestion. But the reason why slope support resistance I find extremely useful is that it describes several things. Okay, one, it's very simple, but is it going up or down? Okay, horizontal is just that, it's flat. So, if you have slope that's going down, then you're ideally selling into a downtrend. Or slope that's going up, you're ideally selling into an uptrend or buying into an uptrend, right? So, that alone tells you one thing more than just horizontal support resistance does. If you are looking at, a slope and it's very steep, it tells you maybe that the trend is extremely sharp. Okay, if it's relatively flat, it tells you that it's not. So this example right here, Aussie yen tells you that this is a fairly steep downtrend. Okay, and it gives you target levels and everything else. Okay, so it's a little more useful, I think, than just simple horizontal support and resistance. Looking at, let's see. Here's the euro, for example. So here's the little support we just hit, 109.90, a little 10 pipper. Can't bounce 100 pips until you bounce 10. No, kidding. Hold on 1 minute. So that would hope that answers. Leon's got a good comment here, good question. Saying that, I'm trying to open this up, hold on. Saying that Yeah, Jay-Z, take care, my man. Big picture cycle. Do you use cycle analysis, big picture cycle points, setting up next week, suggesting lots of volatility and possible key inflection points? Any input? Thanks. Yeah, well, I would say I don't know use I don't you know I'm not a big cycle guy. I haven't really looked into it a whole lot. I have a lot of respect for those that do. Um, you know, do that analysis. Um, but I would say that, if we just look at, for what we're looking at now, with respect to this dollar yen specifically, I'd say that's, pretty interesting because dollar yen being, a pretty solid risk, you know, currency pair, if you will, or yen itself. That's interesting because next week is 119.90, this intersection. So, what happens here next week could be huge, right? If we crash down through this thing, then good night, dollar yen, see you at 114. Okay, not saying you can't bounce before that. The 118.30 area could be interesting for some fighting, and 200-day averages there too. If we rip off this thing though, it could end up being quite bullish. I mean, I'm thinking that we go through it, because of everything that I'm talking about with the Nikkei and all this other stuff, but we'll see. So, the fact that next week has this inflection point, is interesting just simply because of this dollar yen chart right here, right? So I like the fact that there is an inflection point. I'm not sure what cycles you're looking at. If you're looking at any specific, types of cycles, like a long-term cycles or whatnot. But let's look at point out a couple other charts. Obviously, here we've got the dollar peso. Well, I guess I'd say that line is resistance. We've only hit it the last three days. Well, not today, but the last 3 days, and before that we hit it up here. So dollar mex came down and hit the month open price today. In a way, this dollar mex trade kind of protects you against, if there is a huge rip and risk, dollar mex ideally would come off some. But look, that's not necessarily the reason I'm in the trade. I'm in the trade because of the reasons that I stated. I was in the trade mainly because there's slope resistance here. If this thing doesn't hold as resistance, then dollar mex is going the next level is not until a lot higher, like above 16. Okay. But the momentum, as mentioned, via RSI, has been absolutely, dreadful on the daily. If we look at the daily chart, dollar mex, right? You can see the divergence. Look at the close prices here. All right, so we've got divergence here with 67.20, 67.60, 68.34. So this is divergent with this and this, and divergent with this and this. So dollar mex is looking awfully toppy, right? And it's at resistance, so we'll see how it plays out. Here, Raj asking a question about pointing out big topping patterns like Kiwi yen topping pattern. Then we forget about them, or they don't give an opportunity to give. Yeah, so I get it. I point out these big opportunities, and in order to trade these big opportunities, you need to take some pretty big risk. Okay, and if that's your game, that's your game. I mean, I point them out, but I'm looking for the opportunities to trade that don't have a lot of risk in them as well. So, it's the way you stay in this game, over time. Okay, so if you wanna take these look to take setups. I'm aware of the Kiwi yen pattern. If it trades higher into resistance, like here's Kiwi yen, right? If it's able to trade up back into resistance, here's a combination of horizontal and slope. Okay. If it's able to trade up into this region, maybe 84, and it happens to intersect with the median line at some point over the next several weeks, then there's a trade opportunity there because your risk is tight. Okay. That's all I can give you. I mean, we've had some good ones. It's not an easy game, right? It's one thing to point them out. It's another thing to give, exact orders, okay, for getting in and out of the position. We could have some good ones coming up, whether it's this Kiwi yen or whether it's this pound yen here. Pound yen, again, 2 equal legs from the low could be interesting. Tracking 88, 20, 50. Okay. What else do we have here? I mean, we did have, there's been some trades that have been difficult to stick with. The Kiwi dollar short, for example, we were short the day of the top, and then 1,000 pips later, we took like 100 out of it. So, I mean, that's just kind of, trading's not that easy, right? But number one thing is pay attention to the risk part. Most people just don't do that. They're in this to gamble. I'm not. It's my life, so I can't really gamble like that. I mean, you do have to have some sort of a risk-taking mentality, but you can't be stupid either. Sandeep asking about pound. Yeah, we haven't really gone through pound. I mean, I don't have a whole lot to give you on pound other than what's written last night. This is a huge level here. 153.10 or so. I was hoping that you get a spike down on this morning, but and when it trigger us, it didn't happen. But we are coming up on support, 153.10, 11. If that fails, it's going to be pretty big indication, I think, that the market is is due for a bigger decline. But then at the same time, I'd be looking for a bounce from near about 152.30, 152.50. Okay. Another level, I don't know if I wrote this last night, but you see this level here where the gap is? That was the BOE, or not the BOE, that was the gap from the election. The close before that was 52.50, 52.48. Okay, so that's an interesting level in itself. And we do have that intersection with the median line, which is bearish, that is basically comes in today, slightly lower tomorrow, like 52.37, 52.40. Okay, so if we trade into that, remember your Friday low potentially, never sell those Friday lows. That gives you an opportunity to buy into there, and that was the idea behind putting the 52.50 order today, because if you trade into that level, you probably get a good snapback from it, even if this trend is down here, and we don't know if it is or not. Okay, but even if the trend is down from up there, you should probably get a good bounce from downtrend support in this region. Okay, 52.50 again. So that's what I would be looking at as far as pound dollar is concerned. What's looking really interesting? I just talked about dollar MEX, obviously, but there's another currency, dollar-wise, EM, that's looking awfully interesting, and that's dollar Turkish Lira. Okay, remember the election up here? Huge gap up, huge reversal. That's the high. It looks like a spike, an emotional news spike, if you will. This is a monthly chart. You've got a really big candle up here in June. Okay, and we're just now, the last few days, starting to trade below resistance from the lower parallel that's helped been a really good slope, I should say. Okay, so just the last few days, you can see if you zoom in, kind of brushing up into it, finding resistance, Might have something to work with here as far as bearish slope is concerned. Okay, you can see extended a parallel off of there. Okay, not quite resistance, but pretty close. So maybe you get resistance in dollar Turkish lira or get some sort of a topping pattern, that forms. If we look at the short-term picture of dollar lira, it's not especially clear as far as being an impulse. You'd have 1, 2, 3, 4, 5. This looks more like ABC to me. But this is clearly a three-wave rally from here, right? So, as a risk proxy, this is an interesting one to look at because this is telling you that things aren't all that bad. Yeah, so Leon saying EM currency suggesting upcoming pullback makes sense with what I'm seeing. Yeah, and something I wanted to point out, Leon, this is interesting. So let's look at, I'm going to check this out. We always talk about media stuff, right? Type in US dollar today. It's just like a thing I do every day just to see what things say. US dollar news. First one, US dollar is set to rally again. Here's how to prepare. That, at the end of the day, is actually really dollar bearish. When you have, a media piece that suggests the dollar is going to rally, they're making a prediction, it's actually really bearish. Okay, now, look, I'm not saying the dollar is not going to rally eventually. Okay, we look at the US dollar index. Okay, here it is. It's a monthly chart, the weekly chart. Okay, but there's, we're coming up into where we've been in a range, obviously, since March. Okay, so you can see, sharp pullback, sharp rally, sharp pullback, sharp rally. You get the idea. It's very possible we go into a contracting range for a little longer. All right, you could get resistance slightly higher up here. We could have resistance more or less, at these levels. We could consolidate between the June high and June low. Okay, you could go into a triangle from here, A, B, C, D. There's a lot of possibilities. It's very unclear right now what's happening with the US dollar, in my opinion. I don't have a very good handle on it. But, you can't dismiss or mistake, the fact that you've had a big move in dollar yen on the downside, broken some important support on the daily chart as far as that's concerned. The euro is holding up despite seemingly the whole continent falling apart. Dollar mex, that resistance and all that stuff. And then the dollar Turkish lira is just a very interesting, kind of adds to the puzzle, if you will. And we've had a nice little 20 pip bounce here. See, if I wasn't doing this webinar, I would have gone in like huge on this, but that's okay. I like doing these webinars. So hey, look, get a little bounce on euro support. So euro resistance 1120, euro support right here 109.90. There it is. Let's see, Leon talked about, going to be over the year learning, never going to be the smartest person. What I can do is seek out smart people. Cycle inflection point referred to as July start of inflation. Yeah. Mark says I went in huge, LOL. Good for you, my friend. I'm glad you did. You got yourself like 15 or 20 pips right now. So not bad. Yeah, so it's a pretty interesting thing to think about, Leon, no doubt about it. I mean, US dollar is now the safe haven, not gold. Okay, blah, blah, blah. I mean, everyone's dismissing, gold obviously here, and it's been crap, so I guess that makes sense. US dollar set to rally again. Let's see what they say here. So here's a picture of the US dollar with a beautiful crown on it. And this guy is a columnist, and he's predicting the euro is going to go, or the dollar is going to go a lot higher. Okay. Well, he might be predicting something that's already happened. So that's the way I look at it from a contrarian standpoint. And look, you can't be a contrarian for the sake of being a contrarian, but there's plenty of evidence, technical and otherwise, to suggest that, the dollar is vulnerable to a sharp pullback, okay? Not least of which is this chart, right? I mean, we should know really soon, because if we don't hold up here, I mean, we'll see, what is this? 107 confluence the next 2 days. Okay, so we shall see. Alrighty. Finally, here's another. Let's look at macro. Yeah, Leon, true. Even pull back to 107, spike higher, it'd still be consistent with DX pullback. Absolutely. You could get something like this. Here's the dollar index again. Well, here, US dollar. US dollar. And I see spike up to here. Certainly could be. And that would complete, something along the lines of an ABC off the top. Really get people jacked up for a dollar breakout, right? So something like this. Yeah, definitely get the market off balance if that happened. So we'll see. We'll look at macro. We already looked at the equities. The bond market just could be trying to form some sort of a low down here. This is TLT, just the ETF. We've been following the slope pretty religiously here, and watch over the next couple days and see if this thing gets support. Okay, down here. If you look at the futures, 30-year bond futures, we have come into, and we now traded. I put this chart out this morning, but we have dropped below support here. You could watch for support in lower parallel. I don't really have a whole lot to do here. It's in limbo, but the fact we broke above this tells me that we could end up changing kind of the behavior, what's going on here. And again, don't forget these 3 points here. Okay, ended up finding support on this lower parallel. So at least pay attention to when we get up into the median line up here. Okay, which happens to be right in line with 55, 27, 30 seconds. So that's the May high, 5/8 May high. So it's not the May high, but it's the May 8th high and the May 29th high intersects with the median line over the next day or so. Okay. And this would fit really well if we got a spike up into there, dollar yen coming into 1990, and then, getting a bigger bounce. So something to look at. Crude, again, this is the USO, this is the ETF. Crude could be in some serious crap at some point. Again, look at the futures, you can see this just 1, 2, 3, 4, 5, but wave 4 itself is pretty small right now compared to wave 2. So I'd be looking at USO as this slope pretty good, holding pretty well. I'd be looking for crude to trade higher from here. Trying to hold here, you got a reversal day 2 days ago. Okay. Oh yeah, Veselin asking about euro pound. Absolutely. Let me take a peek. Something real quick to look at here on crude oil. Got a J spike in crude ETF the other day, 2 days ago. The last one was at the low down here, so interesting to note. Pay attention to crude the next few days. Obviously, we've had J in downtrends. It's not going to work too well. Okay, we've got them all throughout this. So, the question you have to ask yourself is, the difference here is that these occurred nowhere near any support. Okay, this was just free fall territory. So this one did occur at support. You had support from this lower parallel. So could trade higher from here in crude, which again would also fit with a lower dollar moving forward. Okay, euro pound, let's take a look. Okay, so here we have Euro Pound. Asking about looking to long Euro Pound for a swing trade at 77. Let's see. Okay, so here's an area to watch for. 71.40. Actually, you just said it. You said 71.40. 71.39 right here. This is an area to watch for support. Okay. Again, this was a huge reversal bar. 71.40 is the close of that bar. Would be looking for, I would not risk anything below 70.50. So 71.40, 70.50 is your support. See if we can identify something interesting on the upside as far as slope is concerned. That might be worth watching. Oops, let's see. So I'm moving down in time frame here. I got a shorter term chart here, so. It's a 4-hour chart. So 71.40 could come into play. I'm not so comfortable using this slope here. It's just so steep. That's something that could work out. There's a really short-term one right here telling us that we're at support right now, actually. So I think this is probably going to end up being what works out. You can see here, look at that. Okay, so there's the very short-term support. You see, this is, I'm going to put this on your chart. This is what you want to look at. You see what's this, the late May low, June 9th high, and the June 28th low from the gap. Okay, now we have yet to reach the median line, but there's already reason to suspect that this is worth paying attention to. Main reason, one of the main reasons I should say, is that the slope here is, off these highs is resistance. So you're putting in uptrend resistance on this slope. So it tells you that the slope on the downside might actually be worth following. Okay, so I would keep an eye on that. I wouldn't necessarily be just going long 71.40 the next few days. I'd wait because again, you don't have an extremely well-defined upslope to buy on right there. I think 71.40 might be the right price, but as far as time's concerned, you might wait until next week or even the week after. You at least want to have, a confluence of upslope to work with. So the first one, which would just be the simple trend line off the low here, would come in on the 16th. Again, you do have this as a possibility. Okay, and we're basically coming into there right now. I'm not too comfortable using this because again, it's very steep. It's off a news spike. I don't really like, talked about this several webinars ago, but I don't really like drawing or using those slopes to trade that are off news spikes. Just because they're so quickly retraced. It's, how valid is that point as far as slope's concerned? It's not like you're gonna trade, with that a whole lot. This is different though. Using it here, okay. Let's see, where were we trading before then? So if we were trading before then, put it here, It's still a better description right here. Just the fact that these levels right here line up so well. Right there, right there. Okay. So I'd watch for that. You can get maybe some consolidation here in the near term, and you want to see it, provide support, on one of these lines, and you might be able to get a better price than 71.40. Okay. The weekly chart here. Weekly chart, you've got massive downtrend support, and we have for a while, of course. Okay. From here, so certainly in line with a larger bottoming process. Follow this level. Here's the weekly reversal level, 71.19. That might be your spot right there, Vessel. And 71.20, 71.19, if you will. Stop under 70.50. 70 pips of risk on euro pound, of course, so pound pips, but that's where I'd be looking. Alrighty. I'm going to end it there to get this archived. Okay, so apologies again earlier for the technical issues, but machine seems to be working now. Seems to be working fine now. Wish it would have worked right off the bat, but sorry about that. So I'm gonna get this wrapped up and get it archived for everyone. Okay, everyone have a great weekend. Mark, thank you, my friend. Awesome. I have a swing update out a little bit later. Obviously entering some interesting times. I think it's safe to say this is not going to be a slow summer. So, fasten your seatbelts. All right, take care, guys. Bye.